Greetings, online investors, and welcome to another Investor Roadshow presentation from the Online Investment Conference. I'm Peter Norman, founder of the OIC, where our goal is providing you with investment ideas worth watching. We've got another great idea to present to you today. BacTech Environmental Corporation is a pioneering environmental technology company that's developed a unique solution to remediate highly toxic tailings areas left by abandoned mining operations. It's an exciting innovation, and Ross Orr, President and CEO of BacTech, is here today to tell us about it. Welcome, Ross.
Thank you, Peter. It's good to be here to talk about BacTech and our projects in Ecuador and Sudbury. BacTech is a clean tech company. It's an ESG company. I know that's sort of a buzzword in today's environment, but we are truly a company that can identify the green benefits of what we do, and we can measure and monitor them. We've actually had Moody's have a look at our project and provide us with a very, very positive feedback. So it's a commercially proven technology, which is key because in mining, new technologies are viewed as a no-no until somebody else builds one. And then, of course, it becomes commercial. We've actually built 3 plants in the past, 2 in Australia, 1 in China. And the project that we're doing in Ecuador is actually a plant that we will build, own, and operate for ourselves. We realized that we were only making money for the mining companies by virtue of having a technology that could unlock the value in their deposits because of the high arsenic problems that were there. So sustainability is our core. We use naturally occurring bacteria. These bacteria will take 20 years to do what we get them to do in 6 days. And that's a continuous process, but they're very good at separating sulfide minerals and breaking them down so that you can recover the individual elements that make up a particular sulfide mineral. For BacTech, we work a lot on arsenopyrite, which is an arsenic sulfide, but also contains iron and gold as well. One of the things that we're doing in Ecuador is we've told the miners who are buying product from that if they pre-treat it with mercury or cyanide, we won't buy the product. So effectively what we're doing is we're forcing them to be more environmental if they want to get higher prices than what they're getting currently. The water is recycled in the process. There's no discharges into the rivers, et cetera, which is very common right now in that particular area. We don't produce any noxious gases. And we like to think of, in the case of tailings, we're providing a permanent solution. We want to cure the patient as opposed to just putting a Band-Aid on the patient. That's our capital structure, $193 million. There will be a bunch of warrants that drop off next month. So the reserve for issuance will drop to about 25 million. So fully diluted, we're about $218 million. This is our team. Paul Miller, the gentleman in the top row, is our head of Bioleaching, incredibly bright guy. And everybody on the board of directors brings their own sort of unique benefits. We have lawyers. We have somebody who's in the metal trading industry. We have a fellow who used to be a chairman of a company that was taken over in the gold mining space. And Tim Lewin, who's based in England, is our chairman and a fairly well-connected individual as well. Just to bring everybody up to speed as to where we're at, when we were introduced to this project in Ecuador, the first thing we had to decide was, first of all, we could do business there, and the answer was yes. We then went out and collected samples from 5 different mines in an area that has over 100 mines. We did a 6-month bioleach study in a pilot plant in Perth, Australia. We determined that we could recover 96.2% of the gold that was in the concentrates, as well as stabilizing 100% of the arsenic. So now that we knew that we could actually bioleach it, the next question was, can you make money at it? We decided to do a bankable feasibility study. There's no underground operations here, so we went right to the goal line and came up with a bankable feasibility study. That feasibility study outlined a capex of about $17 million for the project. That's US dollars. Oddly enough, at today's prices, we have at $2,200 gold, our profit is basically equal to our first year's capex of $17 million. It's a very, very interesting project. As I mentioned earlier, we went to Moody's and we got them to do a rating on a green bond that we're hoping to issue to finance the project. They came back with an 80% rating, or very good. We're not involved in greenwashing in any way. So the problem is the sulfides. And the sulfides, when they break down either in tailings or just on the ground, when they break down, they produce sulfuric acid. And when they produce sulfuric acid, anything it touches that's soluble in acid will do so. So arsenic, iron, nickel, cobalt, copper, etc., will all go into solution. In the bioleach process itself, It's a 6-day process where the bacteria are working on these sulfides and breaking them down. And at the end of the 6 days, we have a solid liquid separation. The solids contain the gold and silver because they don't react with the acidic environment in the tanks. Anything that goes into solution in the tanks is then brought out when we raise the pH at a later date by adding limestone. And the first thing that happens when we add limestone is that the arsenic and the iron band together as a ferric arsenate, which is a US EPA landfillable material. And then again, the water is then recycled back into the process. They are the problems of toxic tailings and also, of course, concentrates that are produced by the miners that have very high levels of arsenic. There's only one buyer right now, and that's the Chinese, and they don't treat them very nicely. They probably pay 45 to 50 cents on the dollar for the gold values. We'll return them back to the 65 to 70 cents on the dollar area they used to get before the imposition of taxes that were put in place by the Chinese government. Our motto is "Our bugs eat rocks" because it's the simplest way to explain that effectively the bacteria are chewing and digesting the sulfide minerals that hold everything together. What we do is we step in, of course, and once it's been broken up, and we use conventional technology to, like I mentioned earlier, to produce a gold, silver, doré bar, and then to stabilize the arsenic as well. Our first project that we're building, owning, and operating is in Ecuador. It's in southwestern Ecuador near a major port called Machala, and it's a project, or an area, I should say, that produces predominantly arsenopyrite, which is the material that we love to go after. These are the numbers that we generated from the feasibility study. You can see the capex at 17 million. I would note that was done at the top of the supply chain problems, so it could actually come in a little bit below that. Our operating costs we know are $212 a ton, so it's pretty easy to figure out our margins. You know, if we pay 65 to 70%, add on your $212 per ton, and that's your margin. One of the things that we did was we signed an international protection agreement with the government of Ecuador that calls for international arbitration, as well as a 12-year tax holiday, which is awesome. This project will pay itself back very, very quickly. The numbers that you're looking on this screen here are based on $1,800 gold, so you can see that the revenues number is short. We'll also have a cutoff grade, 50 grams per ton, which is what these numbers are based on. But the reality is that we'll probably be over 60 grams per ton, which is 2 ounces. So we're effectively producing 100 ounces of gold a day. You can see on the right-hand side the milestones. This thing is ready to go. We got our consultation permit in December, which was the final piece to the puzzle. So the locals are happy and they're waiting for us to get out and build something. I mentioned the green bonds earlier. So we've got a $20 million green bond offering that we're marketing. 16 to 17 million will be for the plant, 4 million for working capital. And as I mentioned before, we have a rating on the bond from Moody's, and the project is effectively shovel ready. So why Ecuador? Well, it's a great place to operate from a perspective of, obviously, from taxation. We have the full support of the government. They know that they have to sell mining in the country. And so the easiest way to do it is to introduce green technologies that are hopefully going to allay the fears of the locals who don't like mining. This is a 2-phase project. The first phase is 50 tons a day of concentrate. The second phase will add another 200 tons a day. And effectively, you're creating a regional hub that can bring in material from other parts of Ecuador as well as Peru and Colombia. Our goal, of course, is to build plants in both of those countries at a later date. I mentioned the IPA. It covers up to $75 million in investment because the second phase of our project will be in the $60 million range. But again, highly profitable, after-tax margins north of 20%. And of course, everybody knows what happened recently in Panama. The mining company was lost. Basically, they had to close their mine or shut it down because it was a kangaroo court. It was a local court. And so anything we do will be done in Washington or London. So at least we'll be treated fairly by the government. You can see the economic sensitivity here to the price of gold. We're sitting today at around $21.50. So effectively, the NPV at 5% of this project is around $100 million US versus a market cap of about 11 million Canadian that we have today. Those are the mining sacks you see on the right-hand side that go to China. Presently, those are 1-ton sacks. Everybody that is involved or that will be delivering material to us are within 10 kilometers of the proposed plant. It's a modular technology. We add tanks if you want to add volume, which is what we'll be doing for the second phase. And we should be producing over 100,000 ounces of gold from the final plant once it's up and running. And then from there, we would move on to Peru, where there's lots of what's called energite, which is copper arsenic gold, which we can handle as well. This is an interesting situation. This is the R&D side of what we're doing. In the Sudbury Basin, of course, has been producing nickel for well over 100 years. There's two types of sulfides. There's pentlandite, which is the good stuff. That's what they want. And then there's the nasty stuff called pyrrhotite, which is a very volatile sulfide mineral that will literally try to combust if it's just left out in the open, trying to oxidize so quickly. What we're looking at doing in conjunction with Vale and Glencore and University of Toronto, CanMet from the federal government, is bring solutions to reprocessing what is estimated to be 80 to 100 million tons of this pyrrhotite, which has been buried either on land or in the lakes. We did pyrrhotite bioleaching 25 years ago in Australia, and we created a big soup that we couldn't do anything with. Fast forward to today, we have the technology now to separate the various elements that make up pyrrhotite and then hopefully get them into a form that can be resold, like the iron into the steel industry or the sulfur into fertilizer or sulfuric acid business. Dr. Nadia Mikacek from Morocco, or formerly of University of Laurentian, is running the pilot plant in Sudbury. And we think there'll be some results out mid-year as to our progress. And the idea here is to take a ton of waste and turn it into zero waste. So we've filed a provisional patent. There'll be an update filed shortly on that. But the reality, what we're trying to do here again is to break this thing down into the various components and then find a home for it. Obviously, the nickel and cobalt will make their way into the battery world. This was the pilot plant that we did 25 years ago back in Australia. That particular tailings pile is still sitting there and could be one of our first projects if we were successful in making the technology do what we want it to do. So in summary, we're one of two companies worldwide with commercial bioleaching experience. And that's important because unless you're commercial, you're just another black box in the mining industry, and nobody wants another black box. We focus on arsenic, which means we're running to arsenic when everybody else is running away from it. So it's a very large market sitting there at our disposal. Our EBITDA, we're not paying tax for 12 years. It's in the 25% area, which is phenomenal as far as a project return. CapEx of around 17 million. Once we're funded, we would be about 12 months away from production. The NPV at the current prices is close to 100 million US. As far as the milestones, everything's done. The bioleaching is done. The feasibility is done, the environmental permitting is done, the consultation permit is done. So we're in a situation where we're basically, once we're financed, we're off to the races.
Ross, outstanding presentation, an exciting product with huge potential. Now let's delve into a few questions. What does "our bugs eat rocks" actually mean, and how was the process developed, and how did you get a hold of it?
Our bugs eat rocks. If you look right behind you on that brick wall, if you can imagine, the bacteria would be trying to remove all that mortar, the white part. And once they've removed the mortar, then everything crashes down. So technically the bacteria are eating sulfide mineralization. So that's where that comes from. It's just a simple way of summarizing the technology in a bullet form. The technology itself came from King's College in London, England, where they were, back in the early 80s, they were looking at taking sulfur out of coal in response to the energy crisis of the 80s. Some Australians came along and said, forget coal, this is going to work in gold. And off they went to Perth. And then via Perth, they came to Canada in the late 90s, 1990s, because of the fact of the country, Canada's obviously considered to be a great place to host a mining company, even though we're mining related. I helped take the company public in 1997, and it's been public ever since. And it's gone through many gyrations and iterations.
What do you think is the market potential for the product?
I was asked recently at PDAC by a funder, could you build 10 projects in 10 years? And I said, yeah, as long as we had the money. Once we get the first one out of the way, this will start to become more of a cookie cutter situation where we'll identify areas where arsenic is a problem, and the miners are being paid very poorly, and we'll step in and put in a regional facility. That's our game plan. I was also asked, do I know where our first 5 plants are going to be? And I said, yes, 2 in Ecuador, 1 in northern Peru, 1 in southern Peru, and 1 in Colombia. If we had 5 plants up and running in the next 5 years, we'd probably be producing somewhere between 300,000 and 400,000 ounces of gold per year. And again, at margins that are superior.
What's your marketing strategy if you get rapid take-up? You would have to build plants everywhere, or would you have to get joint venture partners?
Well, I think the obvious thing for us would be to have a joint venture partner who acts like a bank, who understands our product. We don't license the technology anymore. We used to do that. And the only people that were making money were the mining companies because we solved their problem, which was producing a high arsenic product that they weren't getting paid very well for. We cut our teeth then on other people's projects, and now we want to just do it for ourselves.
Are you getting a lot of support from government?
I would say we're getting a lot of support from the government of Ecuador for sure. I mean, to get an EIS done, an environmental impact study done in 7 months is unheard of. But they realize, they have a uphill battle in dealing with their own population, many of whom are not big mining fans. But we all know that if you're going to have electric cars and everything else that goes with it, you need to. Mining's going to have to happen because it's the only place to find the metal. Their pitch to the locals is, look, this is a technology that's coming to the country, and it's green, and it's going to be cleaning up situations as opposed to making a mess. So yeah, the Canadian government, no, we haven't had much luck there. We tried EDC. They all say the same thing. Come back after you've built the first one, and then we'll talk to you. Well, that's not much help to us.
Why is the Canadian government not interested?
They're a bit interested on what we're doing in Sudbury because everybody wants new technology all the time, and we have had some grants. Nadia Mikachik is quite good at obtaining free money, for lack of a better description. We don't really have a lot of situations in Canada where our technology could be utilized. I mean, there's certain pockets of areas that have arsenic in them, but again, the mining companies want to license the technology, and we don't want to do that. So. It's a bit of a Mexican standoff.
What's the timeline to profitability, do you think?
Well, as I said, I was asked at PDAC if you had the money tomorrow, when would you start to produce gold? And the answer is probably 12 to 13 months. It's a large welding operation on site. These tanks are we bring in big stainless sheets. They would be curved in Machala, which is about a half an hour away, and then we would be welding on site. So. It doesn't take a long time to build the plants. All we're missing is the money, which is the stick that stirs the drink, so to speak. And right now we're at various stages of discussions with many different groups, and hopefully we'll get our hands on that money in the near future.
That concludes our question period and our presentation for today. And Ross, before we bring this session to a close, for your final remarks, why not summarize for investors why they should invest in BacTech?
I would say that you can take advantage of the fact that the junior market is on its keister right now. I mean, our market cap at 11 million Canadian versus our anticipated profit in year 1 of 17 million US. Something's wrong. Either we're undervalued and just completely misunderstood by the market, which is obviously what I think, because I do a lot of these presentations and people think that technology is neat, but at the end of the day, I think they want to see bricks and mortar. That's what we're attempting to do. And as I said, once we get one done, it's like dominoes. Every week I'm fielding calls from different countries where people have issues with arsenic and they can't put their assets into production because of it. So it's really just a function of capital. That's, the technology works. We know that.